So Liberation Day is coming, and some people out there are telling us that's going to send gold and silver to the moon, but maybe they were already going there. We need to talk about two things: the rally as it is and the rally as it could be. Now, really, either one of those topics could be their own thing, because gold just hit a new all-time high on Thursday. It hit another one today on Friday. Now, lots of reasons for the recent leg of the rally, but the main ones revolve around trade tensions. But now we're adding inflation back to the mix, and that's the current state of the rally. What else? Well, as for the rally as it could be, Trump is calling April 2nd Liberation Day. He's saying a wide range of reciprocal tariffs are going to rebalance U.S. trade relationships, and balancing trade deficits might sound pretty good if you're in the U.S., but it doesn't sound great to everybody involved, and it might not even sound great to you if you're in the market to buy a new car. Now, I can't tell you how much of this will actually be implemented or what lasting impact it's going to have on the economy, but we can see the impact those announcements are having on gold, on crypto, and the equity markets, and only one of those is going up. Now, if it wasn't clear which is which, gold is continuing its rally. We know that gold likes chaos, and one of the things that we've learned over the past few weeks is that perceived chaos is just about the same thing as actual chaos. Now, I don't do politics here for good reason, but if I had one complaint, it would be that late night thoughts blurted onto social media just shouldn't be a source of chaos. Clearly, though, they are. Now, I don't know how we've gotten to such a strange place, but it's making things seem a lot more volatile than I think they would otherwise be. Now, what does this mean for gold? Well, we're seeing it happening right now. Gold is spiking every time we get a new tariff threat. And if we were to go back a year to our predictions and our forecasts on where gold would be in 2025, well, tariffs weren't even a consideration. So those predictions and those forecasts, well, they need to be updated. Now, before we get into that, quick shout out to channel sponsor Summit Metals. If you're looking for gold and silver, they have you covered. Be sure to check them out at summitmetals.com. Back to the predictions and the forecasts. The big banks, they're way ahead of us. Goldman Sachs just increased their price outlook for 2025 gold from $3,100 to $3,300. They're giving a forecast range between $3,250 and $3,520, and those are big numbers. That'd be a 24 to 34% gain for the year, coming off a 28% gain from last year. And that just happened to be the highest gain in 14 years. So the reason that they gave were unexpected gains in ETF inflows and sustained demand from central banks. And nothing about chaos from tariffs, real or imagined. Now, it's not just Goldman Sachs. Bank of America raised their gold price forecast as well. And there's a little bit of comedy in this one. Comedy because they now say they expect gold to trade at $3,063 an ounce in 2025. Well, that's something that's already happened, so it feels like maybe they waited a little too long to release that one. But it is interesting because they're saying they're expecting $3,350 in 2026. Now, the context here is that they were previously saying $2,750 in 2025 and $2,625 in 2026. And if you were counting along there, you caught that they thought gold was probably going to pull back. Now, those are big bank estimates, and they make a lot of sense. They're going to look at macro factors like investor inflows and central bank demand. All of that makes sense. Now, as a retail buyer, though, I'm also going to be paying attention to the daily charts. And you can see smaller spikes mapping directly to tariff threats thumb-typed out on social media the night before. Now, if you're really tuned into that kind of micro news cycle, you know that April 2nd is being called Liberation Day, the day the threats of reciprocal tariffs lock in and become real. Now, you're probably also aware that that's the day a lot of people are suggesting gold and silver go to the moon. Now, I'm not so sure. It's possible, but not likely, and here's why. We've seen threats of big tariffs walked back several times now. So if the threat of the big tariffs is already priced in, but the final implementation is more lenient, then Liberation Day changes the factors currently affecting the rally and probably doesn't send the metals to the moon. Now, don't get me wrong here, that just doesn't change anything for the year. Gold is a risk mitigating asset, and the perceived chaos that I've been talking about here is perceived risk. I guess by definition, risk is perceived, so that shouldn't be a surprise. Now, it seems like we're going to be seeing this all year long. And below all of this, we still have the possibility of rates being cut, something that would send gold up. We have inflation, another thing that would send gold up. We have gold ETF inflows that we just talked about, and we have continued sustained central bank demand. All of those things would send the price of gold up, regardless of what happens April 2nd. So at the beginning of this, I said there were two things we need to look at: the rally as it is and the rally as it could be. Now, we could say the current rally is giving us expensive gold. That's great for any gold that you already have, but it might make you feel like it's expensive to buy going forward. The spot price of gold right now, as I'm recording this, is over $3,080. Like I said, that might feel like it's too expensive to buy, and I'm not going to tell anybody what to think there. But the rally as it could be is more than some pipe dream of this Liberation Day that would send gold and silver to the moon. That $3,300 number that Goldman Sachs just put out, that doesn't seem off base to me in any way. I can't find a reason that that shouldn't happen this year. No guarantees, of course, but that would be a 7% jump from where we are today. Now, it'd be hard for me to think gold is too expensive at this point, because $3,300 would be a 26% annual gain on top of last year's 28% annual gain. And that kind of performance would be great, really, for any asset class, safe haven or not. So let's wrap this up. We know gold is a safe haven asset. Maybe it's a good way to mitigate risk if that's what you're looking for. And if we look at what's happening right now, we can see gold continuing to climb while the markets and crypto fall. It's doing its job, but there are people out there telling us to treat it like an investment, saying it's going to go up for other reasons. They're going to pin that on fears like Liberation Day and what might happen on April 2nd, and tell you to get out there and buy all you can right now because gold and silver are going to the moon. Now, this is a story that I've heard as long as I've been tuning in, but it always seems more likely when something like this is already happening. So if 26% on top of 28% is the moon to you, well, maybe the price catalysts don't even matter. But if the moon to you means prices are going to quintuple, maybe we need to slow down and check the math. So let's call it good there and get a pulse on what people think is coming April 2nd. Hit us up in the comments. Let us know if you expect Liberation Day to be a new leg up for gold and silver prices, or if you think the tariffs have already been priced in. I'd really like to know if you're buying above $3,000, looking for gold to hit $3,300, and whether or not you even have a price target in mind. Maybe you're just buying gold regardless of price. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.